Good afternoon. This is the India Deep Brief for Friday, 21st August 2026, with verified context across India, Gujarat, GST, business, markets, technology, international affairs, energy and sport. We begin with GST and the formal economy. India's gross GST collections for July were to lakh 11,205 crore rupees, 15.4% higher than a year earlier. Domestic receipts rose 10.1%, while import-related collections grew 28.8%. The numbers show resilience in tax receipts, but businesses should still focus on the quality of compliance, reconcile outward supplies, input tax credit, cash ledgers and classification data before filing. Official notifications and the GST portal remain the authoritative sources for any rate or procedural change. The dispute resolution system is also moving forward. Recent professional summaries of official developments note reconstitution and category allocation for GST appellate tribunal benches from August. For taxpayers, an operational tribunal framework can reduce dependence on prolonged court proceedings, but documentation will be decisive. Contracts, invoices, reconciliations, and a clear explanation of the commercial substance of a transaction should be preserved from the start. In Gujarat, monsoon conditions require district-level attention. Reservoir inflows and rainfall can help farms and water security, while intense local spells disrupt roads, factories, ports, and urban drainage. Businesses should not rely on a single statewide average. Official district warnings, route conditions, backup power and supplier communication are the practical tools for continuity. Exporters in particular should plan for port and road delays before they affect shipping commitments. For the wider economy, the central challenge is converting infrastructure and digital investment into productivity. Roads, rail, ports, power and public digital systems create value when projects are completed reliably and private firms can use them with low friction. Predictable regulation, faster payments and easier logistics can encourage private capital expenditure and jobs. Fiscal discipline remains important because high borrowing costs can crowd out productive investment. Indian markets opened cautiously today. The Sensex was about 0.1% lower in early trade as Asian shares were mixed. Global bond yields remain elevated, and recent oil gains have increased concern about inflation and company costs. One market session does not determine the economic trend, but the combination of crude, foreign flows, the rupee and earnings deserves attention. Households should avoid reacting to rumors, while import-dependent companies may need disciplined currency and commodity hedging. Technology remains a long-term growth engine. Official Indian reporting this month said 62 artificial intelligence prototypes had been developed and 20 solutions deployed across public sector institutions. India has also joined the PAX Silica Coalition to support a more resilient silicon supply chain. The opportunity spans chips, data centers, power, fiber, cooling, cyber security and skills. But deployment must be measured through real outcomes. Accuracy, privacy, security, bias testing, and human review are not optional extras, they are the foundation of trustworthy systems. Energy is the largest immediate external risk. Brent crude was trading near $93.64 a barrel this morning, only slightly lower on the day but far above its roughly $72 level before the Iran war. Benchmark United States crude was near $86.59. For India, sustained expensive oil can widen the import bill, pressure the rupee and transmit into fuel, freight, inflation and margins. Airlines, transport firms, chemical producers and manufacturers should evaluate both price risk and physical supply risk. International markets are also being shaped by high sovereign bond yields. The United States 10-year Treasury yield was around 4.71% early Friday, while the 30-year yield was about 5.26%. Wall Street's S&P 500 fell 0.9% on Thursday, the Dow lost 1.3% and the Nasdaq declined 1%. Higher yields raise financing costs and can reduce risk appetite worldwide. Indian exporters should watch overseas demand, tariffs, freight, currencies and working capital costs as one connected picture. Now to sport. India defeated Pakistan 5-3 in a high-intensity men's hockey World Cup pool match. Captain Harmanpreet Singh scored twice from penalty corners, Abhishek added to field goals and Hardik Singh converted a penalty stroke. The result sent India and England into the second round. India will carry no points forward after its earlier loss to England, so defensive control and conversion under pressure become even more important. India's women also progressed after a goalless draw against England. They now enter the next phase, with the Netherlands presenting a demanding test of structure, ball retention and counter-attacking discipline. Official tournament sources should be used for live scores and confirmed scheduling. In cricket, India's 165-run first Test victory over Sri Lanka in Galle remains an important World Test Championship result. The next match will test whether India can reproduce its control in spin-friendly conditions while managing workload and selection. The next 24 hours should be watched through 5 lenses: verified GST guidance, district-level Gujarat weather and logistics, crude oil and the rupee, global bond yields, and India's confirmed results in the Hockey World Cup. This is Good Thoughts. Thank you for watching and stay informed.